Okay, good. Let's have a quick overview of what happened during the year. Let's just switch this off over here. Right, let's just see a quick overview of what happened during the year. If we look at the FTSE daily trending system, we start off here in January. As you can see, entry, knockout. Entry, not even enough to get a stop loss in, knockout. And that was basically the story the whole year. Entry, knockout. At least here we got a close and a lock-in on profit over there. Over here, at least it went right through up to our target. Here we managed to get a break even. Let's just carry on over here, down here somewhere, right over here again we managed to get a close below the 161, so we could lock in and break even. Same here, once again we had a close above the 161, break even. Yeah, let's just see what happened over here. You were entered, you had a close above the 161, up to break even, and you were knocked out of it again. Same over here, just entered and knockout. Here didn't get a close below the 161, so you knocked out on full stop loss. Yeah, same story. Yeah, same story once again. Over here, same story once again. Yeah, oh yeah, here we had a close above the 161, so at least we had a break even. And that was the story virtually throughout the whole year. Here is the last trend here in December, the last one, which we had an entry and we had a close above the 161 and we were knocked out. Now, the Brexit has affected the market, the FTSE, a hell of a lot. And I think that was maybe the main cause of what's been happening and been going on over here. I think this year I will hold back a bit on the FTSE trading system, and let's first see if we're going to have some positive trades for the year. With that said, let's move on to the SPX, to the SP. Right, let's go back to January. Where were we? Right here, somewhere here in January. Yeah, we had an entry, target, entry. Where was that one there? Oh, entry all the way up to target. This one here you wouldn't have traded because you were still in this trade over here. Oops, no, sorry. Yeah, you were you were entered in, and you came down and you were stopped out at break even. This one you were entered over here, and of course this one here, let me just move that down, that one there, down, and you had a full target on that one there. Here again you were entered, you had a close, or at least an opening over there above, so we didn't move the stop yet. There we moved the stop to above to a break even, and you knocked out on break even. Here this trade here wasn't entered. Here you were entered into this trade which cancelled that entry. So here we had a entry, and of course once again it just went right through, close above 161. We didn't come back down to the break even point, and it hit the target. Yeah, same thing again, we had an entry, but unfortunately we didn't have time to lock in, and it came and hit us on the full stop loss. Where were we? No trade over here. Here was the next one, and it went straight through to target again. I must say the SP has really done very well this year. Yeah, unfortunately we had a entry again and a full stop. Yeah, same story. We had a entry and we had a close above the 161 somewhere around here. Let's just put a line over there and see. Right, we had a close above the 161, so we brought a break even point over there. Yeah, we had an entry, close above the 161. Here it came and knocked us out onto the break even. There, knocked us out onto break even. Yeah, we had an entry and it went all the way up. We had a close above the 161 and again break even. Yeah, we had a close above the 261, so we were taken out with a very small profit. And this last trade over here, we've got a close above the 261 now, and I will be moving the stop loss to the 161 level as soon as I can. So at least on this last trade, we've still got a trade open running, but I must say the SPX has really done very well this year and has made up for the losses on the FTSE. I would like to continue trading the SPX. The problem with that is that you can't trade it on Instaforex because for some reason the XPX and the DAX is not tradable on on Instaforex. So you have to trade it by another broker, and then your margins and your pip value is very high. You actually need quite a big account to be able to trade the system. So now with that said, let's move on. We're going to have a look at the recovery trade, although I'm not trading this one on any account at this point of time, because I'm rather using the 2 Bollinger Band EAs, which is giving me a much better results with a lower risk. But for those of you that are just for a matter of interest, the recovery EA, I'll stop it over here, the video. I'll pause the video here, and I'll continue as soon as I finish the test. Thank you. Okay, let's look at the results of the recovery system. We started off with a $500 account, and as you can see, it climbed up nicely, climbed up, came back at times, but where did we end? We ended off, where are we here? Right, it ended off with a winning trade over there at $665. So you're up $165. Now, considering you started with a very small account, you couldn't really compound or trade the right risk size. But yes, you still made an average of 3% per month on the account if you go and work it out. It works out to, I think, about 2.8, something like that, about 3% per month, which is not too shabby considering you couldn't compound because the account was too small. Now, with that said, let's close off this one here and let's move on to the Bollinger Band, to the Bollinger Band system, and then we will see how that goes, the Bollinger Band 1 and the Bollinger Band 2. So I'll be back with you in a minute again. Righto, I'm back again with the Bollinger Band 1, and as you can see, I closed off over here after that winning trade over there. I closed off for the year, and so that gives us from 500 to 862. So that gives us, let's say, 362 on $500, which is really not bad. Let's just have a work it out quickly. 362 divided by 500. That gives us about a 72% growth for the year, right? Divided by, let's say 12 months. That gives us about 6% per month growth on the Bollinger Band 1. Now, the Bollinger Band 1 is good. I'm using it on my 1 account. I'm trading it there on the live account. I'm quite happy with it. The only thing why I've made Bollinger Band 2, Bollinger Band 2 is a smaller profit, but also a smaller reward. So your risk is a lot lower than what it is with Bollinger Band 1. You can see it's stuck in a couple of trades here towards the end of the year. I was expecting that to happen because normally over Christmas season, a lot of traders are gone and the markets will fall flat. If a guy looks at this region over here, you can see the markets, there's nothing really been going on over here, and the market is just flat. And that's something where you want to try and stay out of. If you know the markets are going to be flat, rather stay out of the market. So, with that said, let's go and have a look at Bollinger Band 2. Be back with you in a moment. Righto, back again. The Bollinger Band 2 has just finished running its test. Now, I know a lot of people say, yes, but a back test is not as good as the live trades, but unfortunately, I check every month as I complete a run. I compare it with the live trading. Surely, sometimes the entries and exits are a little bit different, but the trades are all basically there and all the same, very, very close to each other. So the results of my back tests is good enough to accept it. But anyhow, this account, Bollinger Band 2, had grown from $500 to $780, which is about a $280 growth, which gives us about 56% for the year, and it gives us roughly 5% growth per month. Now, considering, like I've said many times, that you start with a $500 account, so the account is too small to compound. Once the account reaches a stage where you can start compounding, you will see a huge difference in percentage growth over a year and per month, because the bigger your account is, the sooner you can start compounding. I have got a spreadsheet where I can calculate how to do it and how to work out the levels. I will make this spreadsheet available on the website as well for download. Just hold on, let me see if I can find it quickly. Right, here I've brought it up. It's a spreadsheet which I have made to calculate the risk-reward ratios trading the Bollinger Band 2. As you can see, it's for the FTSE. All these are calculated, of course, for using Instaforex, because all the values here are all taken from Instaforex. So the pip value is 20 cents per pip. Trading 0.02 lots will give us 40 cents. The margin is $45 per 01 lot. So if we look at trade 1, we have traded 0.02, right? So that's our trade size, 0.02 lots that we are trading. Our take profit is 120 pips. Our stop loss will be 40 pips. So if we hit the stop loss, we've got 80 pips balance. Trade 2, if we're going to enter trade 2, once again, 120. If we lose this one, we have lost that 40 plus this 40 gives us 80. We've got 40 pips left over from our original 120 pips. Yeah, we're going to do it again, and we end up with 0. So our total profit, if we're going to hit a profit, would be $48 along this trade over here. Our total loss would be $16.32.48. So our balance or our profit would be on the first trade. We'll make, if we hit a full potential over here, 32, 16, and 0. Our margin will be $90 because it's 2 lots at 45. So we've got a margin of $90. Now, at this stage, as you can see, that's colored in with one color because that's the first 120 pips. Now we're going to increase our lot size, so our pips will increase double as well because we're going to double our lot size now. We're going from 02 to 04. So we're increasing our lot size. And the same thing all over again, all over again, all over again, over again. So this thing has been made. You can have 15 losing trades in a row. Now I haven't seen that yet. The maximum I have seen using this system was 7, but 15 just to be safe. So even on trading at 15, you might lose $240 of your total $500 account. So it's pretty safe. I do think that you can make it. It can make it happen. But of course, like I've said many times before, you must bear your margin as well, righto? Because although you might lose $240, your margin of $450 is also still there, which you have to bear in mind as well. So yes, it'll be very dangerous to trade this full account, the full system like this, on a $500 account rather on $1,000, because if you do run into 15 consecutive losses, you will make it quite easy because you've got your 450 margin, which you get back if you don't have a margin call. Of course, if you have a margin call, you're going to be losing this money too. So if you don't have a margin call, all you'll be losing is that $240 and from a $1,000 account. So I normally just put in a little bit of extra money to cover the margin, and sometimes I don't take the margin money or the margin that you put available for margin for as trading. So with that said, the Bollinger Band 2 will be available in January 2020 sometime during the month. It will be available on the MT4 store. If there's no problems with uploading it onto the MT4 store, it should be available there for people to rent. The current rent price will be about $50 per month. I know that you're going to say it's not worthwhile then, but yes, in the beginning, maybe if you don't want to trade a full account size, it might not pay you because you have to pay your VPS, which I think is about $220 per year, and of course the $50 a month for the program. So yes, it could cost you about maybe, let's say, $70 a month to run the system. But yes, you must work it out for yourself. If you are prepared to lose $70 a month for your first couple of months, just to make sure you're happy with it and it's working correctly, then you can trade on a live account and you can just step up lot sizes and start compounding it, and very, very, very soon you'll be making much more than your $70 that you have lost. So a guy mustn't look at what's going to cost you to run the system, rather look at your potential profits. Really, I think the indices is really a good thing to trade. It's much better than the currencies or anything else, because indices, if you go and read up about indices, it's normally the top 100 shares of the stock market of that particular country. Same as the SP 500, which is made up out of the top 500 shares. So yes, it's really worthwhile looking at it. I mean, when you're looking at the indices and you're trading on a long-term trend, even like this with these EAs, it becomes very hard to wipe out all your money. With that said, happy trading for 2020, and for everybody who supported me during this past year, thank you very much. Happy New Year to everybody.